Hello friends, good evening to all of you. And from this class onward, we're going to start with the JAIIB English series, where we are going to learn about each and every concept so as to clear the JAIIB exam in the first attempt. So first of all, let me just tell you in detail about these classes. So first subject that we're going to start with is the AFM, that is the Accounting and Financial Management for the Bankers. And we'll be starting in the module A, the core concepts related to the accountancy and every single thing that you need to learn about. So even if you're a non-commerce background student, you can still be learning accounts very much effectively and can be clearing the exam in the first attempt for sure. So in this series, each and every class will be available to you free of cost, and we'll be covering the complete syllabus for the JIIB, all the 4 papers. So make sure to subscribe the channel right now and press the bell notification icon so that you get updated whenever we upload the new videos. And the point is that during the live session, the classes will be available free of cost. But after the live session, the classes will be available only to the premium members. So if you are a premium member, you will be getting the access to the recorded classes. Plus, additionally, you'll be getting the access to the PDF notes, which are downloadable, printable. You'll be getting the chapter-wise previous year questions, mock tests, mega tests, PDF notes, everything, right? So that will be just more than sufficient so as to clear the exam in the first attempt. And starting with the AFM, that is Accounting and Financial Management, we are going to cover the very first session for this, right? So make sure that you have liked the video and make sure that you have subscribed to the channel so that you can watch all the videos ahead, right? So the first chapter that we are going to cover today, it's related to the bookkeeping and the accounting, right? So the first chapter, it's related to the bookkeeping and the accounting. So let me just tell you that accounting is a bigger umbrella. Accountancy is actually a very wider concept, and bookkeeping is actually a part of it. So accounting is something related to that will be calculating each and everything, and you'll be getting know that what is a financial position, what is a profit loss account, what is a balance sheet. Each and everything is covered in accounting, and in the very end, you give a position to the owner of the business that this is the position right now and this much how you can be benefited out of it. So everything will be told to you, right? And that's accounting. But when I'm talking about the bookkeeping, it's about it how I'm going to record the transactions, where I'm going to record the transactions, how those transactions are to be recorded, which transactions are to be recorded, which are to be excluded, and that is it, right? So bookkeeping means when we are recording the business transactions, right? In the original book of a business, that is a journal, right? So we are having the different type of books, and first of all, we do record in the original book of entry, that is a journal, and after that we post it into the ledgers, and then the trial balance is being prepared, and after that we do prepare the profit and loss account, the balance sheet, and everything, right? So that's the case, and that's the process that is being followed, right? So bookkeeping means what? Bookkeeping means that we are going to record the business transactions in the book of the original entry, that is said to be journal. And accountancy is what? Accountancy is compilation of the accounts. It's basically that we want to know each and everything related to the state of affairs of business. So bookkeeping is the basis of accounting, right? So it's a basis of accounting. It's a fundamental of the accounting, but accounting is a very wide concept, right? So let's learn about the bookkeeping, the basis of it. So first of all, we need to identify the transactions, that which financial transactions are to be recorded. We are to record only transactions which can be measured in the terms of money, because only those transactions are responsible for the accounting purposes. And then we record them in the book of original entry, that is in the journal, and then further we classify them in the ledgers, right? So that's the process that we need to follow. These are the things that we need to follow. So first of all, identify, measure the things in the terms of money, further recording them in the book of original entry, and then we need to do the classification of the same, right? So if I have if you're able to learn the things, if you're able to hear me out, if you want to learn all the concepts related to the JAIIB, AFM and every single subject, make sure to give this video a thumbs up, right? Now, I told you that the bookkeeping is related to what? That you need to know those particular transactions which are to be recorded, and with the help of bookkeeping, we will be leading to the accounting. So first of all, we are going to learn about the bookkeeping, and later on we'll be learn about each and everything about the accounting, right? So the term accounting, as I told you, is a very broad concept. It's not a smaller concept. It is a very broad concept that we want to learn about the bookkeeping. So bookkeeping is just a part of the accounting, whereas accounting is a broad concept. It basically covers the balance sheet, profit and loss account, how the system operates, and also we do analyze the data also, right? So accounting gives the business the idea that how the business is being done. It tells us about the business needs. It tells us about the business decisions, how those are to be taken care of, right? Those all things are being taken care of in the case of the accounting. So whether we are talking about the balance sheet, whether we are talking about the profit and loss account, whether we're talking about the analyzing those statements, whether we're talking about the reviewing those statements, those all things are covered under the accounting. So accounting is made up of what? That we are to record the expenses, we are to prepare the company-wide financial statements like balance sheet, profit and loss statement, and also we are to analyze the cost of operations. We need to complete the income tax returns too, right? And we need to help the business owners so as to understand the impact of the financial decisions also, right? So those all things are being covered under the accounting, whereas bookkeeping is just a part of the accounting, right? So accounting involves what? That we first of all need to classify the business transactions, like we are talking about the bookkeeping here, right? So systematic classification of the business transactions to be done. So whatsoever the events transactions are there, those are to be recorded. And further, then we need to summarize the recorded events. We'll be preparing the balance sheet. I just told you very simple concept. First of all, journal, then ledger, then trial balance, then profit and loss account, balance sheet, etc. Right? Means final statements. Right? So that is the process. Kindly please note down this particular concept, very much important. This is very much important so as to learn the basics of JAIIB, right? So first of all, the entries are being recorded in the journals, then those are classified in ledgers, posting is being done, and further the trial balance is being prepared, and after that the final statements are being prepared, right? So summarizing the recorded events. So you need not to cram the things, just try to understand the thing that first of all whatsoever is happening around in the business. Let's say case I made a payment, I purchased the things, I made a sale, I paid commission to the employees, right? Whatsoever the things are being done, those are to be classified that these are the business transactions, right? And we are to note down those transactions. That is the bookkeeping. Now, after that, we'll be doing what? We are going to record those things. It means we're posting them in the different accounts, right? And the third thing would be related to what? That will be summarizing the different events, right? We will be preparing the balance sheet. We will be preparing the trial balance first of all, right? And after the trial balancing is being done, we'll be going for the balance sheet and the final statements, right? And then last one, it would be related to interpreting the financial transactions so that we can reach out for the much more decisions, that in what part we are expending more, right? And where we can be safeguarding ourselves. That thing can be done. And further, we need to basically whatsoever the data is being there, whatsoever the final statements are being there, we need to interpret those statements. That is the interpretation of the financial statements, right? So what are the features of accounting? Accounting is basically what? We are recording the transactions, we are classifying them, we are summarizing them. Simple process as that, right? So after that, what we are doing it in a systematic manner. As I told you above, first of all, the transactions are being recorded in journal, further posted into the ledgers. Third one, the trial balance is being prepared, and after the trial balance, the final statements are to be prepared, right? That is to be done. So first of all, we are going to do what? We need to record, classify and summarize those transactions. Then trial balance is being prepared, profit and loss account, the balance sheet is to be prepared, right? And accounting does deal with only such transactions which are available in the form of the money form, right? So whatsoever the transactions are there which are in monetary form, only those transactions can be recorded. Only those transactions can be recorded. And accounting also interprets the financial data. So if one company is having more current ratio or debt equity ratio is more, right, that will be interpreting the different things. We'll be learning each and everything when the ratio analysis chapter will be going for. Now we'll be learning each and everything. Don't worry about it right now. Just focus on the thing that whatsoever is happening around in the business, we are to record those transactions. We are to basically record, we need to classify, we need to summarize, we need to prepare the trial balance, we need to prepare the final statement. That is the process that we need to do, and that is accounting. That is simply accounting. And when we are talking about just recording, classifying, and summarizing the transaction, that is bookkeeping. That is simply the bookkeeping, right? So we are to learn these two concepts for now. Further, it's related to the various types of accounting. So when we're talking about the various types of accounting, there are different types. There are very different types of the accounting which are available over there. And what different type of accounting are available? First of all, we are having the stewardship accounting. First of all, we are having the stewardship accounting. Now, what do you mean by steward? Steward means managers. In the old era, what happens actually in the early times, people need to hire the stewards, which were the managers, right? Which were there so as to manage their estate, their property, they need to manage, right? And what's of the accounting position they render to their owners periodically, that is said to be stewardship accounting. Let's say case that you have hired a servant, you have hired a manager who is basically taking care of your estate, who is doing the accounting of your estate and is presenting the data to you periodically. That is a stewardship accounting, right? That's stewardship accounting. And financial accounting means what? Whatsoever the expenses, whatsoever the commissions, whatsoever the losses or anything that you are basically dealing with in monetary form in general, right? Those transactions are being recorded, those financial statements are being produced, those transactions are being taken care of. That is your financial accounting, right? So it's related to categorizing the transactions, it's related to recording the transactions. So whatsoever the transactions which are in monetary form, in general scenario also we deal with the balance sheet, the profit and loss account. That is all about the financial account, right? Statements, balance sheet, income statements, those are being prepared. Those are prepared according to the GAAP. Now, what is GAAP? This is generally accepted accounting principles, right? So what's the generally accepted accounting principles here? As per that, the accounting statements are being prepared, and this is being done for the stakeholders. These stakeholders could be different, right? One stakeholder could be the internal employees, then another stakeholder could be the owner of the business, or the let's say members, or the shareholders, right? For the regulatory authorities, for the taxing authorities, right? So that is a financial accounting. Now the cost accounting is being done for the manufacturing industry. Let's say case one manufacturing hub is there, ABC manufacturing companies here. Now that is materials, and further putting up the laborers toward it, expending the overhead expenses, salaries, distribution and everything, and selling these things into the market. Now they need to take care of that, what resources are being used and how the costs are to be managed, right? Those are to take care of the same. Now in case of the manufacturing thing, we need to take care that what cost incurred and how we can be save that particular cost and how it can be reduced. We need to analyze the different we can say job cards or different things, that where the losses can be there, where the issues can be there, and that is actually related to the cost accounting. That is the cost accounting that we need to take care of. Is that clear? Is that clear to you? Right? And further, it's related to that management accounting. It's related to the management accounting. Now management accounting is concerned with what? It is concerned with the preparation and presentation of the controlling information, so as to control the information that that the policies might be available to the top management, and based upon that they will be able to make the decisions about it, right? So the what are the various matters which are concerned to the day-to-day processes, which related to the non-routine processes or operations also there, that information must be available to the top management, right? So it's about preparing and presenting the information, controlled and accounting information to the top management so the decisions can be taken care of. Right. So in the case of the management accounting, the focus is not on the financial transaction just. It's also related to the information which should be available to the top management so that they can take decisions, they can make decisions about it. So that they can make informed decisions about it. That is a management accounting. Is that clear? Is this particular part clear? Further, it's related to social responsibility accounting. Now, social responsibility accounting basically widens the scope of accounting. Now, because we are not just taking care of the business decisions, but we are also taking at what we are imparting toward the society, to the economy, right? In addition to the economy, what we are basically offering to the society around us, right? That is a social responsibility accounting. Further, human resource accounting, simply said to be HRA. HRA is what? HRA is a managerial tool which will be providing valuable information to the top management so as to make the decisions that adequate human resources are available or not, right? And basically it encouraging whom? The managers, that so as to basically considering that the human are the most valuable asset for the company, right? And how positively those can be used so as to make more money or so as to make more out of the company, right? So that's basically HRA, human resource accounting. And further, it's related to inflation accounting. Now, inflation accounting is related to what? Now, inflation is what? Let's say case previously the value of some commodity was rupees 100 and today it is rupees 112, right? Now, it basically is being increasing. Now, the inflation accounting does deal with the adjustment of the value of the asset. Now, we need to adjust the current value and further the fixed value which was there or the base year value which was there. We need to adjust the values accordingly, right? So whenever the prices do change due to the inflation accounting is about that we need to manage those particular changes, right? So whatsoever the changes were there, we need to manage those things, right? That's the inflation accounting. So in a nutshell, we can say the stewardship accounting was related to what? That whatsoever the estate was being managed by the stewards, that accounting. Financial accounting means we are dealing with the monetary things, we are to manage those particular transactions, we are to record those transactions. Cost accounting is basically taken care of in the case of the manufacturing industries, because they are to take care of the costs, different costs, they are to manage the cost, they have to basically take care of the different resources, right? And further, if we talk about the management accounting, it was related to that how the information could be available to the top management so that they can make the informed decisions. And social responsibility accounting is not just about the basically addition to the economy, but it's all about the what we are basically giving to the society, but we are basically adding on to the society. And human resource accounting is like is the brain available to the company, right? Is there adequacy of the human resources? It's all about that. And inflation accounting is basically managing and adjusting the cost to the inflations, right? Further, there are some standards when we are dealing with the accounts, right? It's not like it's being done in one company, it's being done in different companies, it's being done let's say over the different industries. It's if we talk about the global factor, right? One company is there in India and the other company is there in USA. We have to basically we can be making inferences about these two companies also. So how it can be done? It can only be done if some standards are being set up, if those standards are being dealt with, and if those standards are being followed, right? So we are going to talk about the accounting standards in India and what is their definition, what is their scope, right? So whatsoever the accounting standards which are being followed in India, those are issued by the ICAI, that is the Institute of Chartered Accountants of India. And basically ASB was constituted by the ICAI, that was being constituted in 1977, and the main function of ASB is related to so as to formulate the accounting standards. So standards are being issued by ICAI and it set up the accounting standard board, and accounting standard board formulates the accounting standards, and so that the ICAI can mandatorily be issuing those standards. That's the scenario, right? So under the section 129 subsection 5 of the Companies Act, the financial statements where they do not comply with the accounting standards, if there is any deviation, we need to write the reason that why deviation was there and what is the financial effect of that particular deviation. That is to be told, that is to be done. And accounting standard, very important point, accounting standards are mandatory Where? Where the accounting standards are mandatory? Where the company is listed on stock exchange. So if the company is listed on the recognized stock exchange in India, and let's say case those are issuing the debt or equity securities, or they are in a scenario that they are going to issue the securities, right? In both the scenarios, they are to basically mandatorily be following the accounting standards. That can only be done if they are following the accounting standards. So that is mandatory for them, right? It's not like an option. It is a mandatory thing which is to be done. And whatsoever the commercial, industrial and business reporting enterprises whose turnover is 50 crore rupees, more than 50 crore rupees, those are also to follow the accounting standards, right? So accounting standards must be followed in that scenario also. Is that clear? Kindly please confirm. Is that clear? Now, let's move further. It's about the accounting standards. Now, here we are having a list of the accounting standards, although there are a lot of accounting standards, but I'm just going to tell you a few out of it. So, accounting standards, one is related to the disclosure of the accounting principles, valuation of inventories. Now, whatsoever I have highlighted in the red ink, those are important to learn because those can be asked in the exam that this accounting standard is related to what. So, if you're unable to cram, just leave this part. If you're unable to memorize these things, just leave this particular part. You can be having an idea. Just give me a brief idea related to it that accounting standard 10 is related to the fixed assets. It is related to the fixed assets, and accounting standard 6 was also there, but now it is deprecated, right? It is deprecated, and further the depreciation is there and it is now withdrawn, and such matters are now related to depreciation are being taken care of under the accounting standard 10. We can simply be saying that accounting standard 6 does not exist much longer now, and it is taken care of under the accounting standard 10. Clear? Right? Further, it's related to the GAAP. Now, what is GAAP? This is generally accepted accounting principles. GAAP is related to the generally accepted accounting principles, right? Now, how these GAAP, how come this GAAP is going to matter? So these are the basic accounting principles. First of all, when we are talking about the GAAP, these are the basic principles, right? They will be providing us with the framework. They will be telling us the accounting rules, standards, which will be industry specific. So whensoever we are talking about the GAAP, we are talking about the basic accounting principles. We are talking about the industry specific accounting practices, right? And India, as I told you, the basis of accounting standards are being constituted by whom? By ICAI. As I told you, ICAI set up the ASB. ASB tells the standards and inform it to ICAI, and ICAI mandate those standards, right? So the basic accounting principles may not be the direct part of the accounting standard. It's not the case that whatsoever the generally accepted accounting principles are there, that those are going to be direct part of the ICAI standards. It's not the case, but these are the related laws, and these are assumed and expected universally, right? That universally these are to be followed. That universally, whatsoever the standards generally accepted principles are there, those are to be followed. That is the GAAP. Is that clear? Is this clear so far? Kindly confirm. Right? Now, what are the main objectives? What are the main objectives? First of all, that whensoever we are to provide the information must be useful. Whatsoever the information that is to be provided, the information must be useful to the investors, to the creditors, to the users. Means whatsoever the persons who are going to consume that particular information, that information must be useful to them. That must be logical. Whatsoever the information we are going to provide related to investment, related to credit, related to financial decisions, that must be logical, that must be rational, and that information must be helping the users or potential investors, that they can be assessing the things about the company. They can be having the perspectives about the company. They can be looking into the things that what amount is being received, then what amount is being paid, what is the cash inflow, what is the cash outflow. They can be looking into the things if the standards are being followed only, right? So that's the case. Is that clear? Now let's learn about the basic things or basic principles which are being covered under the GAAP. First one concept, it's related to the business entity concept. Now, as per the GAAP business entity concept, the business and the owner, those must be considered separately. Like even if we consider a proprietorship firm, right? Let's say we are having a proprietorship firm A and the owner is person A. So we have to take care of the fact over here that whatsoever the amount being is basically given as an investment by the proprietor or by the owner to the company, that's a liability to the company. That's a liability to the company, right? Because the business is having a liability that money is to be returned back to the owner, right? And whenever there is a loss, that will be recorded on the asset side, right? So this is the business entity assumption. This is about the business entity assumption, first of all. Clear? Now the second one, it's related to the monetary unit assumption. It's about the monetary unit assumption. Now what do you mean by monetary unit assumption? That whatsoever the financial transactions are being there which can be expressed in the monetary format, right? All the financial transactions must be represented in a monetary format. Only those transactions are to be reported and none other transaction is to be reported. Is that clear? It means only those transactions are to be recorded which can be there in the money format. If it cannot be in the money format, it should not be recorded. Let's say case the health of the proprietor. Now definitely it is very much important for the company to work, but it should not be recorded because it cannot be in the money format, right? The further concept, it's related to the accounting period concept. Accounting period concept. It means the accounting process must be completed in a given certain period of time, which could be usually a calendar year or a financial year. And every single transaction which is related to that particular accounting period, that must be the part of the financial statements prepared for that particular period only. Let's take the case that you paid the rent in advance for the next 12 months, right? You paid the advance in you paid the rent in advance for the 12 months, but the rent for the month of January, February and the March will be for the current financial year, and for from the April toward the December, for the 9 months, it should be covered in the next 9 months or the next financial year it is to be covered, right? So we'll be considering the 9 month rent which you have paid in advance as a prepaid expense, right? And that will be presented as a asset, right? Whereas the amount for this financial year, for the 3 months, that is January, February, March, it will be considered as an expense. Is that clear? So that's about the accounting period principle. And further, it's about the historical cost concept. Now, when we're talking about the historical cost concept, what does it indicate? That whatsoever the assets are there, those are to be recorded at the cost price, at the cost at which you have acquired the asset particularly, not the current market value, that is to be considered. Is that clear? That is very much required, and that's the concept related to it. Further, the concept is the going concern assumption, that whenever a company is being set up, it is being set up for a longer duration. For a longer duration it is set up, and it is not set up for a short duration. Clear? Whenever we are going to set up a company, the company is set up for a longer duration. It is not set up for the short duration purpose over there. That is a going concern, because if we'll be considering that the business is going to liquidate in the near future, indefinitely we need to restate the assets and liability at the current price and not at the cost price. If we are going to assume that the business is going to liquidate, right, in that scenario we cannot be costing, we cannot be basically we cannot be restating the prices at the cost price. We have to restate them at the current price, right? And that is a point of assumption that the business is a going concern and it is going to operate for indefinite amount of time, right? Further, after that, it's related to the full disclosure principle. Now, full disclosure principle says what? That the if even you basically do represent the accounting entry, let's say you have recorded the accounting entries. Now, that particular accounting entry individually does not represent the whole picture to you. You need to provide the relevant information toward it. You must be looking at the different narration. Even when you post entries in the bank, right? Credit entries, debit entry you post, you do give a narration to it, that what it is all about. So that is basically the full disclosure. So even about the transactional level, even in the balance sheet or financial statements, you are to provide the complete information, relevant information toward it, right? So at the transaction level, it can be given by giving adequate narration toward it. And at the financial statement level, you provide the notes to that particular account. You provide the notes to that particular account. Then it's related to the matching concept. Matching concept. Now, let's say the case that you have earned a revenue in the year 2025, December, right? Then you should be presenting that revenue in that particular financial year only. That should be corresponding to that particular financial year only. Same way, if you have expended some amount, let's say in January or in, let's say in the month of March, that amount must be showcasing in the that particular financial year statements only, not in some other financial statements, so as to show a true profit picture. Is that clear? Further, it's related to the accrual basis of accounting. It's related to accrual basis of accounting. Accrual basis of accounting says that whatsoever the revenues are there, whatsoever the expenditures are there, those are to be recorded in the periods where actually they have incurred, not related to when you have received or paid or spent the cash or cash equivalent. It's not related to that. Let's say the case that you earned, let's say case the interest was due on 31 March. That the interest was due on 31st of March 2025. But you actually received the amount by 30th of April, right? You received the cash by 30th of April, but the due date when it was to be due, it was in 31st March 2025. So you should be considering that particular amount in the month, in the year corresponding to 31st March, in the financial year 24-25 only, and not related to 25-26. Is that clear? So that's about the accrual basis of accounting. Let me just give you one more simple example related to it. Let's say the case that the loan was there and it was amounting rupees 10 crore. 10 crore loan was there, and the installment went due on 25th of March, right? The installment was due on 25th of March. Now, the interest was accrued. The principal amount which was basically due now by 25th of March is now not being paid by 31st of March. Now, that particular date is considering toward the financial year 24-25. Financial year 24-25, right? From 1st of April 24 to 31st of March 25, right? So it should be considered in this particular accounting period only, not related to some other accounting period when you are actually going to receive the amount. Same goes for the expenses. So if one expenditure was related to the previous financial year, it should be considered in the previous financial year only, not related to the date when you have actually paid the cash or cash equivalent, right? So that is accrual basis of accounting. Further, it's related to the consistency principle. Now, what is consistency principle? Consistency principle is very simple, that you should be consistently be using the same laws, bylaws, procedures, processes which you were using, and you should be doing it for the series of transactions. Like for one particular month, I'm using written down value method of depreciation. For the other month, I cannot be using the double declining method of depreciation or sum of years digit method of depreciation. I cannot be doing that. I should be consistently be following the accounting procedures so that I can be having a meaningful comparison. This is very much required. Further, it's the materiality principle. Now, materiality principle says I'm to record the, let's say, let me just give an example. I'm to record the particular, let's say, depreciation on the fixed assets, right? Whatsoever the fixed assets are there, I'm to record the depreciation on it. Now, consider that I'm having a wall clock which is amounting rupees 300. It is amounting rupees 300, and that's the case useful life is for the next 5 years, right? Or let's say I'm having a punching machine or stapler which is amounting rupees 40, and it is going to last for the next 4 years. Now, this is also a fixed asset. Am I to calculate the depreciation on these assets also, and to record these particular assets in the assets account? No. Why? Because those are not going to impose any material impact to the financial books. Those are not going to impact those are not going to impact my financial statements much, right? So accounting principle basically allows that we can be disregarding such particular transactions which are not going to affect the decision making of the users under the financial statements, right? And so as not to make the financial statements voluminous, very much voluminous, the materiality concept is there, right? Further, it's a conservatism. It's a conservatism. Conservatism says what? That whatsoever the anticipated expenses or losses are there, those are to be accounted for. So if you're going to have a anticipated loss, you're going to have an anticipated expense, those should be taken into account. But if you're going to have a anticipated gain or potential income, that should not be considered, right? In that case, that should not be considered. That is to be taken care of. Is that clear? Is this particular point clear over here? Right? Now, that was all about the basic principles about the GAAP. I hope that you must have understood all these particular points. Are you clear with such points? Kindly please confirm yes or no. These principles are very much important. Every single principle over here is very much important. Now, let's learn further about setting up the GAAP. Setting up of the GAAP. Actually, the main SEC was created first of all, right? SEC is what? SEC is the Securities and Exchange Commission. SEC is the Securities and Exchange Commission, and it was created because of the Great Depression, right? And SEC has actually encouraged the establishment of the some bodies like AICPA. AICPA. Now AICPA is what? AICPA is the American Institute of Certified Public Accountants, right? And also SEC was responsible for setting up of the FASB, that is Financial Accounting and Standards Board. Financial Accounting and Standard Board was also set up by the SEC, right? And SEC actually works closely with the private organizations which set up the GAAP, but SEC does not individually or independently does not set up the GAAP. So SEC is working closely with the private institutions which do set up the GAAP, but SEC itself is not setting up the GAAP. That is to be taken in record. Is that clear? Is this point clear to you? And what is AICPA? AICPA is the American Institute of Certified Public Accountants, right? And AICPA actually appointed the Committee on Accounting Procedures. So CAP was basically set up by the AICPA, that is Committee on Accounting Procedures, right? And when the FASB was created, when basically SEC said that the FASB is to be created, that is Financial Accounting Standard Board is to be created, the AICPA established the Accounting Standard Executive Committee. So when the SEC said that the FASB is to be created, after that particular point, the AICPA that basically established the ACSEC. Now ACSEC is what? Accounting Standards Executive Committee, right? And this ACSEC that basically publishes audit and accounting guidelines. So whatsoever the audit and accounting guidelines are there, whatsoever the statement of positions are there, right, those are being published by the ACSEC. Is that clear? Is this particular point clear to you? Right, just let me just navigate to that particular point. So it says that when ACSEC was established, now further point is related to that these guidelines are published by ACSEC. Now audit and accounting principles summarizes the accounting practices for the specific industries related to the colleges, airlines, casinos, etc. Right? Further, it's related to FASB. FASB is what? FASB is the Financial Accounting Standard Board. It is a Financial Accounting Standard Board. So the simple process is there. First of all, it's related to SEC, which individually does not set up anything. You need to take care of the thing, right? And SEC encourage the establishment of the AICPA and also about the FASB, right? And further, after the establishment of the FASB, AICPA did what? AICPA did what? AICPA basically established the, created the ACSEC. ACSEC. That was the part that we have read so far. Further, FASB we talk about. So FASB considered and FASB detected that the APB that must be dissolved and a new standard setting committee is to be created, right? So APB, which was previously there, that is basically now dissolved and the new structure is considered, and new structure is basically having three institutions, three organizations, and these are Financial Accounting Foundation, FASAC, that is the Financial Accounting Standards Advisory Council, and FASB, that is the Financial Accounting Standards Board, right? So these three organizations are there. And why these three transactions are there, organizations are there? Because APB was dissolved. APB was dissolved, and further FASB basically is also part of the three organizations, right? Which will be now setting up the new standards. Further, it's related to GASB, that is Governmental Accounting Standards Board. Governmental Accounting Standard Boards. It was created in 1984. And GASB basically addresses the state and local government reporting issues, right? Structure is same as that of the FASBs. So whatsoever the structure is related to FASB, the same is that of the GASB. The same is that of the GASB. Is that clear? Is this particular point clear to you? Now, let's move further. It is about the transfer pricing. Now, transfer pricing is actually very much important. Let's learn it through a picture. Now, what do you mean by the transfer pricing first of all? Let's say the case that the company is basically having the different divisions in different countries, right? One in USA, one in India, one in some other country, right? And let's say case that particular division in India is going to buy some product. Division in India is going to buy some product from division in USA. Now, at what price this division will be transferring those particular assets or those particular things or materials to this division? So the prices that will prevail, that is the transfer pricing. So transfer pricing, we can simply be saying, is referring to what? Prices of the goods, services which are there in the multi-divisional organizations, particularly in cross-border transactions, we can say, right? Is that clear? So that's the point related to it. So there are different points related to different, like you can consider in this example, we are having a division A, right, whose origin is country X, and division B, which is having the origin in country Y. Now let's say case this is to provide some services to this particular division B. So what amount is to be paid by division B to division A? That is basically the transfer pricing. And different costs are to be considered. Multi factors are there which basically influence the transfer prices. It could be related to multinationals, it could be related to the capability of the accounting system, it could be related to the custom duties, it could be related to taxes on profits, and anything, right? So all those points are to be considered. All those points are to be considered, right? Now let's consider the different points or different methods. First one, it's related to the arm's length price. What do you mean by arm length price? What do you mean by the arm length price principle? This is a general principle. So those prices must be applicable as per two unrelated non-disparate parties would agree to a transaction. Let's say case when A and B are not known to each other, and they what price they will be following, that particular price is to be followed as per the arm's length price principle, right? And in this particular case, the guidelines are being given by the OECD. These guide whatsoever the standards are there, those are guided by the OECD standards. Now there are two types of you can say points or two types of methods which are available. One, it's related to the traditional methods, and the other one, it's related to the non-traditional methods or profit-based methods, right? First one, it's related to CUP. Now CUP is comparable uncontrolled price. CUP is what? It is comparable uncontrolled price. Now CUP does what? Now we will be comparing the price, that how the price is being there in case of the two unrelated parties. Let's say case, same arm's length price method, right? Like A and B are two unrelated parties, and what price they are offering to each other, and what price B is ready to pay for the for that particular price for that particular commodity over there. So that price is being offered. That is the CUP. That is comparable uncontrolled price. So we are going to compare the price of the internal transaction to the price which is being taken care of, or which is being like let's say acceptable to the two unrelated parties. That is the comparable uncontrolled price, right? So let's say guys, internal cost is rupees 300 and we are offering to the unrelated party at rupees 600. So at what price we are going to offer it to our division? That is a comparable uncontrolled price, right? Further, the second one, it's related to CP, that is a cost plus method. Now there is a markup which is added to the cost incurred by the selling division. Let's say case the internal cost is rupees 300. Now a fixed markup will be added up. Let's say 25% markup is added up, and that amount will be added up to the cost price, and that will be charged to the related party. So whenever the there is trade related to the finished goods, then this particular method is being used. Generally, then this method is being used. The third one is the resale price method, that is RP, resale price method. Now here in this case, we are going to start at the point where the product is being sold to the third party, right? Let's say it was being sold at rupees 600 to the third party. So this was the selling price. In case of the CP, we were going for the cost price. But in the case of the resale price method, we are going to consider the sale price, right? And the appropriate markup is to be subtracted. let's say case we subtract 70% from the appropriate markup so as to reach the price that will be charged to a related party, right? So that is a resale price method. That is a resale price method. So in case of the traditional methods, we are having three methods: comparable uncontrolled price, cost plus method, and the resale price method. And further we are having non-traditional methods also, and the first one, it's related to profit split method. Now when the functions are very much integrated, let's say ABC firm is there and XYZ firm is there, and these are the sister concern of the major company, right? And further they are too much integrated. Now in that scenario, let's say one product is being produced and that is to be offered, right? In that scenario, the profit will be shared on the basis of contribution. Now the contribution they have basically given into that particular division, based upon that the prices will be taken care of. Let's say case its contribution was 40% and its contribution was 60%, and let's say case the price is rupees 100. Now the profit sharing would be based from what? It will be based upon the prices will be validated based upon the profit sharing, right? So it will be 40%, rupees 40 for the XYZ, and rupees 60 for the ABC. Rupees 60 for the ABC. Clear? Is this clear? Now the next one, it's related to the TNMM method, that is transactional net margin method. Now transactional net margin method is basically a unified version of the resale price and the cost plus method. Now in cost plus method we were doing what? That we were having the cost price and we were having the markup which was added up, and in case of the resale price method, the selling price and the markup was subtracted from there. Now in this scenario we'll be using both of these two so as to identify the price at which we will be offering it to the our sister concern, right? Or the same venture, or let's say other division of our company, right? So this is being done so as to ensure that a fair margin is being applied. Is that clear? Is this clear? So this is about the different cases or different methods related to the transfer pricing. Now, after this particular point, the last point that we need to learn about, it's the IFRS. It's about the IFRS. IFRS is International Financial Reporting Standards. Now, when you do reporting on international grounds, we must still be following some standards, right? And these standards are being formed as a common global language, that if we are to compare our company globally, right? If we are to understand the accounts globally, how we can do so that we can be comparable across the international boundaries, right? So IFRS was having the original name of the IAS, that is International Accounting Standards. So previously it was Internationally Accounting Standards, but now it is IFRS. And what is IFRS? IFRS is simply International Financial Reporting Standards, right? And IAS was basically, previous name were IAS, and these were being issued between 1973 to 2001 by the IASC, that is International Accounting Standard Committee, right? And on April 1, 2001, the new International Accounting Standard Board, IASB, took over from the IASC so as to responsibility so as to set up the international accounting standards, right? So basically nothing happened much. IASC was dissolved and IASB taken care of all the functions. All the international accounting standards were taken care of, right? And existing IAS standards were called international standards, okay, that we call international accounting standards. And now IASB basically has continued to develop the standards. Now it is IASB, not the committee, but it is a board, International Accounting Standard Board, which will be developing the accounting standards for the international level, right? And the principal objectives of the IFRS are, foundations are, so as to develop a single set of high quality, understandable, enforceable, globally accepted IFRSs, and so as to promote the use of these standards, So first of all, we need to develop the unified version of the standards. Then we need to promote these standards. We need to take care that the emerging economies are following these standards and those are being reporting in these standards, right? And also we need to look into what is the need of their reporting. Let's say case one industry or one emerging economy is there, and what standards does they do require, right? And also says to promote and facilitate the adoption of the IFRS, because if no one will be adopting, there is no meaning related to developing such standards. Is that clear? So that's all about the first chapter. So in this particular chapter, we learned the very basic concepts of the bookkeeping, accountancy. We learned about the different types of the accounting. We learned about the basics of the bookkeeping also, but not much. That will be covering then further chapters. And after that, we learned about the different concepts related to the GAAP, FASB and everything. And then we covered about the different principles of the GAAP and the transfer pricing, again very much important concept. And then in last week learned about the international financial reporting standards, right? In the next video we'll be learning much more important concepts. So if you have liked the video so far, give this video a thumbs up, and if you want the PDF file for this, just WhatsApp me writing AFM updates or JAIIBB updates and send it to the number 83609 I'm just writing over here. You just need to WhatsApp me on the number 83609 and I'll be sharing the details with you. So that will be all. Thank you so much and see you again in the next video. Happy learning.